Hey guys, hope you and your families are doing well. In recent days, I've been posting a lot to my platform about precious metal miners and the potential opportunities that we may see develop as leaders pull back towards their 21-day EMAs and or 50-day simple period moving averages. So in this video, I'm going to take you through a couple of my recent trades in what I deem are the leading precious metal miners as they were forming shakeout demand tails. Now you may remember shakeout demand tails was the topic of last week's YouTube video. So I was teaching you about shakeout demand tails. It's one of my favorite swing trading setups, and to look for that shakeout demand tail to form around one or more key daily moving averages, or potentially you see it on the weekly chart around the 10-week simple period moving averages. So we're going to split this video into three main parts. I'm going to illustrate why I was so focused on precious metal miners at looking at the weekly charts. We're then going to go into the daily charts at the leading gold miners, and I'll take you through my trade in Kinross Gold and also Newmont, and then we're going to take a look at the leading silver miners, and I'll take you through why I targeted First Majestic Silver. Before we get into it, I'll let you know that Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. You will see some of the stocks that we're going to be covering in this video popping up now. Pay attention to the earnings, the sales, the estimates coming through. That is what I put significant emphasis on. If you're interested in a discounted Market Surge trial, then you'll find a link to that in the description and the comment section below. So we're going to start off on the weekly chart so we can get a bigger picture perspective before we go more tactile onto the daily charts. Now, at the time of filming this video, I do have a long position in Kinross Gold and Newmont, and I'll take you through those trades when we get onto the daily charts in a couple of minutes time. So let's start here, bigger picture perspective on the weekly charts. Now, what I'd like you to take away from this video as well is not only thinking about shakeout demand tails I was teaching you last week in the YouTube video, but also thinking about groups and themes setting up. So the market tends to be very thematic in nature. So one of the things that I think about when I'm scanning through a couple of thousand stocks every day is, am I seeing stocks from the same group or theme setting up? If I am, I give that even greater weight than if there's just a lone wolf stock that's a solar stock or this stock or that stock setting up. I like to see the group, the theme acting very constructively, which is what you're about to see when we take a look at precious metal miners. So let's begin with the group ETF. So this is where I start. So we're going to look at GDX, which is the gold miner ETF that I look at, and then SIL, which is the silver miner ETF. So if we take a look here at GDX, you can see on the weekly chart is pulling back into the black line, which is the 10-week simple period moving average. Now that is closely aligned with the 50-day simple period moving average on the daily chart. And when we look on the next chart, I'll skip forward, what you're going to see is back-to-back shakeout demand tails forming on the 50-day as GDX was pulling down. These are what I was teaching you last week. Okay, I think I released a video on Friday or Saturday, these shakeout demand tails around key moving averages. So if you haven't seen that video, go and watch that video for shakeout demand tails. Now you can see it in action and how I use them in my own trading. So GDX is pulling back to its 10-week simple period moving average. Now this is the spot, this is the region where I'm looking for the institutions, the larger operators, to step up and support the stocks. And I give it even greater weight the more stocks that I see from that specific group or theme finding supportive action around that key moving average, around the 10-week, around the 50-day. Okay, so GDX is pulling in to its 10-week simple period moving average. Now just going on a sidetrack here with commodity related stocks, so that could be your precious metal miners, your oil and gas related stocks, your uranium related stocks. I more so want to enter those on pullbacks than breakouts because of the mean reverting nature. If we think about this 10-week simple period moving average as kind of like a linear line for the trend, what do you notice? Well, it ebbs and flows, it mean reverts around it, right? You can see, okay, it's above it, below it, above it, below it, blah, 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 blah. I'm trying to talk too fast, aren't I? It's above it, it's below it, it's above it, it's below it, it's above it, it's below it. So I'd more so rather enter on pullbacks, and pullbacks where? Around the 10-week simple period moving average. So GDX forming a really nice shakeout demand tail on its 10-week simple period moving average. We take a look at SIL, which is the main silver miner ETF that I pay attention to. You get a really nice shakeout demand tail here on the red line, which is the 40-week simple period moving average, closely aligned with the 200-day simple period moving average on daily charts. And what do you notice? For about 4 weeks, it's generally trading pretty tight. Yes, it tried to go 1 week here and left what I call a supply shoe, but the last 2 weeks, you've pretty much seen shakeout demand tails, low relative volume. The 10-week is just there, and a quasi kind of cup and a handle forming in the second half of this base. If we now take a look at an individual stock perspective, so the SIL and the GDX, think about that as a bucket of gold miners or silver miners. That gives me a feel for, okay, what is the average stock within the group doing? And we're going to talk about, I don't want to trade the average stock, I want to trade the leading stock. And when we go more tactile on the daily chart, they are some of the concepts I'll be explaining. But I'm thinking here, the average gold mining stock is finding supportive action around its 10-week simple period moving average and pulling in quite constructively. If we now start looking at some of the leaders of the group, what do we notice with Kinross Gold? Pretty orderly pullback into its 10-week simple period moving average, bouncing off of it. Alamos Gold, again, it's kind of pulling back into its 10-week simple period moving average. Nice shakeout demand tail forming here, and the volume is stair-stepping down. Newmont, which is the real institutional leader right now, note how it found supportive action here previously around its 10-week, here just above its 10-week, here just above its 10-week, and then a pretty orderly pullback into its 10-week simple period moving average. Hecla Mining, which is more of a silver related stock, pulling into the prior highs of this base, and what bar do you see forming on the weekly chart? Shakeout demand tail on what moving average? The 10-week simple period moving average. So guess what? When I'm seeing this action, I'm going, precious metal miners are where I really want to be focusing. And a lot of them, certainly the leaders, have estimates going into all-time high territory, significant forward guidance being raised as well. That's potentially before the price of gold and silver continue trending higher, which I think the intermediate and long-term trend there is up. And what you're also seeing on a quarterly basis is very impressive year-over-year earnings and sales growth, plus acceleration in the after-tax margins. So they are firing on a lot of proverbial cylinders. So that is what I like looking for. So now let's go more tactile. So this is where we're going to go into the weeds, and this video is going to become very advanced very quickly. So try and stay with me. If you haven't watched last week's video on shakeout demand tails, I would encourage you to do that. So let's just start here on the left hand side, which is going to be GDX and XAU, which is the gold and silver sector index. Now, what do you notice over the last two of the last three bars, okay, before you get this nice reversal bar coming through? So reversal bar there, reversal bar there. What two bars do you see around the purple line? Now, what is the purple line? The purple line is the 50-day simple period moving average. What two bars do you see? Shakeout demand tail, shakeout demand tail. There's one, there's another one. So you don't just get one, you get two. Back-to-back shakeout demand tails off the 50-day simple period moving average. That, to me, as the bigger boys and girls in the market stepping up and now accumulating positions when they see enough liquidity and perceived value right in the spot, right in the region where I want to see them doing it at the 50-day. Absolute textbook as textbook can be. So now the question becomes, and this is when you're doing your screening and you're doing your scan, okay, you're running through, maybe you got 100 stocks, 5,000, if not, maybe not doing 5,000 stocks, 500 stocks, 1,000 stocks, a couple thousand stocks, but you're running through, you group them into industry group and you're going through and you're going, hang on a minute, another precious metal miner, another precious metal miner, another precious metal miner. They're all finding supportive action around their 50-day or their 21-day or whatever it may be. This is how you think about themes in the market, and I call it a developing pocket. I'm looking for those pockets of strength. I want to trade in the pockets. I want to trade within the themes where I think, okay, this is setting up to move higher. And then you can see the strength of the reversal coming for GDX. But then the question is, okay, how do we dial in and focus on the leaders? Because if I was to point to these bars here, so let me go for this bar here. Okay, this bar here, so this is where it's going to get really advanced really quickly. So try to stay with me. This took me years to learn, but I'm going to try and explain it to you in about 5 minutes or so. So try and stay with me because I think this will be really important. So this concept here focuses around, okay, relative strength is not my opinion. It's not your opinion. It's the opinion of the market. Okay, so when we get pullbacks in a specific group or a specific theme, on the pullback is where we get to see the greatest amount of strength. What are the stocks that the institutions don't want to let go of easily? What are the ones that they're just like, yeah, whatever, we're going to dump it. We actually want to be in this stock over here instead. But what are the ones that the institutions do not want to let go of? What are the ones that they're holding on really tightly to? And they're like, no, we're not going to give this one up easily. Now, how could we see that visually? Well, if you take a look here, we've got Alamos Gold, okay, and then we also have Kinross Gold. Now, these are two of the leading junior gold miners. But what do you notice with Alamos Gold? Well, Alamos Gold actually pulls all the way back to its 50-day simple period moving average. You see this? Pulls back to its 50-day. Interesting. So it's looking about as strong as the group over here. But what do you notice with Kinross Gold? Do you see the 50-day? Right there. Did Kinross Gold get to its 50-day on the pullback? It didn't get there. So which is stronger? Which is stronger, Kinross Gold or Alamos Gold? Alamos Gold got all the way back down here to its 50-day, whereas Kinross Gold went, no, I'm just going to hang on around the 10-day and 21-day EMA. I'm going to be so strong, I'm not even going to get to the 50-day. This is the market showing its hand. This is the market saying, hey, we prefer Kinross over Alamos Gold. If you're going to target one, target Kinross. It's stronger. I want to go with the strongest stocks in the market, in the strongest themes or developing themes. So this is where you see the strength. It's on the pullbacks you often get to see the strength. So you can use some of the key daily moving averages as reference points. Okay, if one gold miner went all the way back down to its 200-day, I have absolutely no interest in it. Why? Because well, you have the group ETF on its 50-day, you have the leading stocks around their 10-day, 21-day EMA like a Kinross Gold, and then that laggard is all the way down by its 200-day. I have no interest in it. I want to be in the leaders. As Livermore said over 100 years ago, focus on the leaders. The action is in the leaders. So if you're going to target a junior gold miner for the 10th of October session, Kinross Gold is the one to go for relative to Alamos Gold and relative to some of the others like an Eldorado Gold, which is EGO. So if I was to just load up EGO here, Eldorado Gold, look, Eldorado Gold, it didn't even hold its 50. It's down here. The 50 is hit. It's lost. It's nowhere near it. It's gone below it. Okay, Kinross Gold is the one to target. Now, if we're talking about the bigger cap stocks, so the larger cap stocks of the group, okay, we can look at Newmont versus Barrick Gold. So if we look at Barrick Gold, it's about as strong as the group ETF. Okay, it's kind of shaking out underneath the 50-day there. It does bounce off its 65-day, maybe in the grey line there. Okay, GDX looking pretty similar. But what do you notice with Newmont? Does Newmont even touch its 50-day? Doesn't even touch its 50-day. See the strength? What is stronger? Is Barrick Gold stronger that's able to go through its 50-day, or is Newmont stronger that holds above its 50-day? If you're going to target a large cap stock of the group, for me on this day here with the information that you have, it's Newmont. Newmont is the one to be targeting here, given the relative strength that we have seen on the pullback. So I know exactly why I'm targeting Newmont. I know exactly why I'm targeting Kinross Gold over, say, Eldorado Gold and Barrick Gold, and potentially another large cap one of the group being, say, a Wheaton Precious Metals. It's down here below its 50-day. I want to target the strength when I see the strength. So this is how it's not just about looking for shakeout demand tails. It's then about trying to dial in and go, okay, what are the strongest stocks in the group? Now, what you may be able to do as well is overlay some of your fundamental analysis. Okay, what stock also has the best earnings growth, the best sales growth, the best estimates, the acceleration in the after-tax margins? There's some of the other things that you can layer on top. So then it's not only from a technical perspective, but also from a fundamental perspective. Nicholas Darvis would call that his techno-fundamental approach. So that is what you're trying to do. Align the technicals with the fundamentals ideally as well. So let's now go into silver miners. So we've got 4 charts loaded up here. So I targeted a trading at the time of filming this one in First Majestic Silver. Okay, so I was targeting it through the height of this trigger bar. So trigger bar, it looks like a mini shakeout demand tail, right? But inside bar there, sitting in between its 10-day and 21-day EMA, black line and blue line on my chart. So this is the entry bar here. I'm taking it through the height of that bar using a buy stop limit order. So if we take a look here at SIL, so again, I think it is a really worthwhile exercise, at least once a week on weekly charts, but certainly at least a couple of times a week, guys. Scan through a list of group or theme ETFs. Scan through the list. Maybe you got 50, maybe you got 100 of them. Scan through, because if you see this action, you just have to focus on. I cannot emphasize this enough. Like, dial it in and focus. Silver miners are getting ready to move higher. Look at the 2 bars. Shakeout demand tail. Shakeout demand tail. Right around the 21-day EMA. And note how it's undercutting recent base lows. See that? Back-to-back shakeout demand tails. The volume giant. Like, this is a group that is getting ready to go higher. Like, that is what it looks like. That is what it looks like when it's getting into position. The proverbial sprinter getting into the starting block. That's what it looks like. Study history. That's what it looks like. You've got to dial your pattern recognition in and be able to focus that, and then back out the chart and go, well, hang on a minute. Not only is it doing that, look at the size of the base. Like, this is a big old base. It's a multi-month consolidation. It's nearly a circa 6-month consolidation. And now it's starting to tighten. Then you could look at this and go, okay, cup and handle as well. So not only over the last couple of weeks is it really constructive action, kind of Darvis box-esque in there, but look at the tighten. Like, this is then on October 10th. That's a session to be looking and targeting silver miners. That's a session. That's a signal. That's what it looks like. So if you do your work, you're then getting prepared to go, okay, now I'm targeting the silver miners. So then it begs the question, which one are you going to target? So now we're going to go even further down the Alice in Wonderland rabbit hole. You ready? Here we go. So what we have is we have First Majestic Silver, Pan American Silver, and Hecla Mining Company. All 3 of these are leaders within the silver miner space, okay? So then the question is, which one do you target and why? So let's start going through that exercise. Let's do the same exercise that we were doing with the gold miners on the previous one, right? If we look at the silver miner ETF, okay, it's closed below its 10-day EMA on October 9th. However, it's just above its 21-day EMA, looking pretty constructive. So this is the average silver miner. If we look at Hecla Mining, it has been strong, but short term, is it as strong? See how it's not been able to close above its 21-day, and it's actually below its 10-day as well. So I would ignore Hecla Mining for the next session because actually it's closed down here, whereas the Silver Miner ETF has closed here. So we're going to ignore Hecla for this one. Then what we have is Pan American Silver. So okay, Pan American Silver, a nice shakeout demand tail, closes just above its 21-day EMA, just below its 10-day EMA, and it's looking pretty similar to that of the group. Okay, similar to SIL there. But if we look at First Majestic Silver, it's actually able to hold above its 21-day EMA during the session. So it holds above the blue line and closes pretty much on its 10-day EMA. So if you look at the SIL, the Silver Miner ETF, it goes below its 21-day EMA. Hecla Mining, obviously below its 21-day EMA. PASS, below its 21-day EMA. AG, First Majestic Silver, just goes, no, I'm so strong today, I'm not even going to go below my 21-day EMA. So if we're just doing that analysis, looking at price relative to moving averages, I would say First Majestic here is stronger. It's also recently acquired Gatos Silver as well, which I think is going to add a significant amount of production and thus revenue to First Majestic as well. So if we're just looking at that analysis, okay, I would be thinking, okay, First Majestic. Now you're ready to go down the Alice in Wonderland rabbit hole. Now what we're going to do is we're going to link initial risk in relative to the 20-day ADR percentage. Actually, what we're going to do before that is we're just going to do the ADR percentage, then we're going to link initial risk into the 20-day ADR percentage. Are you ready? Here we go. So what is the 20-day ADR percentage? If you want to see the indicator that I use, it is this one here. Let me click on it. If you search in TradingView indicators, ADR percentage space / ATR, it's the one by Armour Schluckler. There's other ones. I use that one. It works perfectly fine. I've used it for many years now. So that is the one that I use, but there are other ones if you want to find it. So what does it mean? What does it all mean, right? Question of the universe. So SIL. So the 20-day average daily range percentage, excluding gaps of SIL, is 2.89%. Okay, 2.89%. So the average range of SIL over the last 20 days, excluding gaps, is 2.89%. Now, why do we want to be aware of that? Because remember what I was saying with GDX and SIL when we were back over here, is you want to think about that as the average gold miner or the average silver miner. So the average silver miner has a 20-day ADR percentage of 2.89%. Okay, that's useful. Now, what I want to do is I want to trade the quicker ones in the group. Okay, the momentum leaders. I want to trade the momentum leaders or the true market leaders. That's where I'm trying to trade. That's where I'm trying to focus. Okay, I'm trading the leaders. As Livermore said 100 years ago, focus on the leaders. So if SIL goes up 10%, I want to be in a stock that potentially has a 20-day ADR percentage of 1.5 times, 2 times, 3 times, 4 times that of the group ETF. So it's a lot quicker. So it could go up a lot more. Okay, I don't just want to have the stock that kind of matches the SIL Silver Miners ETF because I may as well have just bought the Silver Miners ETF. I want to get some leverage on it. How do you do that? Well, you can trade a stock that is quicker than the group. Certainly if it's displaying relative strength. So you see how everything feeds in. You see the thought process. It's very detailed. As everything, the devil is in the details. You've got to focus. You've got to trade in the details and be very specific about what you're trying to do. So if we look at Hecla Mining, what's the 20-day ADR percentage? So the average daily percentage range of Hecla Mining, excluding gaps, is 4.06%. Is it quicker than SIL, the Silver Miner ETF? Yes. Okay, that's good. What about Pan American Silver? Well, it's 3.56%. Is it quicker? Yes, it is. But what do we see with here? First Majestic, the quickest of the lot, 4.83%. Relative to the SIL Silver Miners ETF, 2.89%. AG is quicker. This is the quickest one. This is your proverbial momentum leader. It's quicker than the group. And as we were looking at with the 10-day, 21-day EMA analysis, that is also short-term stronger as well. So now what we can do is we can think about initial risk relative to the 20-day ADR percentage. So we can use it as a metric to gauge risk again. So if we were just going to go and take and move through the high and stop underneath the low of these three hits, I'm just going to go and take this one here. So that would be 2.9%. Like that. So I'm just going to put the percentage of the range there, 2.39%. And then if we were to go here with Pan American Silver, 2.4%. Now we've already excluded Hecla Mining because it's closed below its 10-day and 21-day EMA. So it is less than, it's not showing the strength that I would like to see relative to say SIL, the Silver Miner ETF, or some of the other ones. It's pretty favorable in terms of the initial risk relative to the 20-day ADR percentage. It's just over half. That's pretty darn good. But for reasons that we said, I'm going to exclude it. So it's really between Pan American Silver and also AG. So what do we see with Pan American Silver? Well, the initial risk, if we were using a buy stop limit order, targeting it through the high, the shakeout to Martel, stop loss underneath the low, as I was teaching you in last week's YouTube video, would be 2.4%, assuming perfect execution, okay? Relative to a 20-day ADR percentage of 3.56, it's around about 2/3. It's not bad, right? However, if we were to look at First Majestic, we analyzed and said, okay, this one is strongest from a technical perspective. We could bring the fundamentals and things like that into it as well. But now what we have is potentially an initial risk of 2.39%, assuming kind of perfect execution, relative to a 20-day ADR percentage of 4.38%, nearly half, just over half, right? So actually, in terms of the technical strength that we're seeing and the initial risk relative to the 20-day ADR percentage, this is the most favorable one to be targeting. That's why I'm targeting that one there. So targeting it through the high, stop underneath the low, starts moving out, free roll into it, as I teach you in the blueprint video on the channel. Now I can sit and see if that intermediate term trend wants to play out. If I take you back to 2016 for this stock, April 2016, like this, here we go. See this here. What do you know? 2016. Look at that action there. Okay, you get shakeout to Martel, tight bar there, shakeout to Martel, and then you get a trigger bar there. Then what I want to do is sit. I then want to sit and see if that plays out. I want to ride that intermediate term trend. So I really hope that video there is useful for you guys to take the shakeout to Martel further down the Alice in Wonderland rabbit hole, lead on from what I was teaching you in the prior video. There you go, look at that, there's another shakeout to Martel. 2006, they're everywhere, right? They're everywhere, right? So you really want to be aware of this. I hope that it helps you as well with your day-to-day screening, week-to-week screening, and thinking from a thematic perspective. Okay, that's a really key shift in terms of your mindset. Instead of just thinking about individual stocks that you want to do, you want to see a little bit bigger picture and think about themes, think about developing themes. Okay, are the stocks from a similar theme setting up? You can see this here in April, right? I know this video is now going on, right? But look at this. This is in April 2016. Look at the constructive action. Look at the constructive action. Look at the constructive action for all of them. It's the same thing. It is literally, as Livermore said, nothing new happens in Wall Street. It's the same thing. You just need to train your pattern recognition, get your day-to-day systems and routines in place to then take advantage of these types of opportunities. So I really hope you guys have enjoyed this little bit of a longer video. If you have, please do subscribe. Please do subscribe to the channel, Terrible December. Subscribe to the channel, like the video, leave me a comment, all of that stuff, because the YouTube algorithms love it when you do that. Thanks for watching, and I will see you in a future one.